All right. Hello, good morning, good evening, and good night. I hope you guys are doing absolutely fantastic because today we're going to be talking about a popular cover call ETF known as IWMY. It is the Russell 2000 Enhanced Option Income ETF. Basically, they write cover calls on IWM, which is the Russell. And today what I want to talk about is this insane 110% dividend yield. And this stock recently went through, or this ETF IWMY recently went through a stock split. So you can see here the dividends have jumped up. But even with the jump in dividends, it is still paying a staggering 110% every single year, quote unquote, if this dividend was to continue for the rest of the year. So what I want to do is I want to talk about IWMY. I want to look over the stock price chart. I want to look over the Russell 2000. And then I also want to tally up exactly how much you would be able to generate if you had 5, 50, 330 and 1,250 shares. I wanted to stagger these numbers so it gave it kind of like a realistic expectation without, you anticipating what exactly your monthly dividend amounts would be. So today we're going to talk about that and exactly how much it's going to cost in order to own these amounts of shares. So if you guys do enjoy this video, please do remember to subscribe. I want to give a shout out to Sir Mike because he said, or she said, I'm not sure, I'm going to assume this is Mike himself, IWMY current yield is 120 plus. Can you do a redo on this video, bro? Absolutely, man. And you know what? I'm gonna give a like for that YouTube algorithm. Thank you very much, Mike, for suggesting this. And we just got another 2 subscribers. We got 66, make it 68 subscribers in the past 28 days. Please do remember to subscribe and like this video if you don't mind. That would really help us out. But anyways, we're gonna talk about IWMY. Okay, so basically, you look over their long-term price chart history, it's pretty poor. You look at this downtrend. This is kind of adjusted for the stock split. You could see here it started about, let's say, roughly about $60 or so, dropped all the way down to what is now 36. That is the adjusted return. But over that time period, we can go back and we can look at the dividend history. IWMY was paying out some pretty insane dividends. This was back when it was probably about about $20 per stock, because they were paying out $1.25, $1.29. And what we want to see here is the dividend kind of staying about the same. And you could see here for a very long time, the dividend stayed above $1, which is very fantastic. You could tell it definitely paid out a high priority in dividends, but the share price definitely took big hits for that. Sure, you could argue and say you could reinvest in order to kind of outweigh those returns, which IWMY would definitely produce a positive return if reinvested, but your capital would slowly depreciate. And you could see here, as the capital depreciated, you could see the dividends slowly got less and less, approaching under $1 at 91 cents, down to 70 cents, and then 88 cents. But then we came back when they made the stock split to a $3.67 dividend. If we were to take the last dividend, which was 0.88, and the stock split was a reverse stock split 1-to-3 ratio, we multiply this by 3, you could see the dividend is much greater this month than it was previously in the previous month. So that's something to keep in mind when we're thinking about that stock split. So with the jump in the dividend, IWMY is currently paying a 110% dividend. Now, IWM, which is the underlying index, you could see here over the past year, it's actually performed very well, almost going up about 30 to 40%, which if you're paying about 100% in over 100% yield in dividends, that's not going to outweigh the capital loss. So even though IWMY is invested in the price returns of IWM, it doesn't keep up, and you can see here that it trends down over time due to the high dividends. And what I could do is go over the holdings with you, but I don't really understand them, to be honest. You could see they hold treasury notes, which most cover calls do. I'm not really sure what I'm looking at here. When I look at cover calls, I do understand that when you are buying a cover call, you often buy it because you intend to hold the underlying stock for a long time. But in the meantime, you might not think it will appreciate or depreciate that much. What it's saying here is for a long time, but do not expect an appreciable price increase in the near term. Basically saying, when you're buying a cover call, you're going to expect the underlying maybe not to move as much. And so you're trying to collect some premium on a stock that would otherwise stay flat. Now that we kind of got that out the way, let's talk about each share and each amount of shares and how much dividends we could generate from that. So we're looking at 5 shares of IWMY at $36.80. We're going to calculate that right now. I want to do 36.80 and I'm going to multiply that by 5 shares. So $184 investment, going to put that down right here. Let's see how much that will generate us in terms of monthly income. So we have 367 times 5 is what I'm going to do here, 3.67. And if you stay with me, we're going to see $18.35. So you can see here, $18.35. You could see that from a relatively small investment, $184, you could generate about $18 a month at the current dividend rate and with the current payout. Now, moving to the next one, we have 50 shares. So we're going to do 50 shares times the share price of 36.80. How can I remember all of this? We are now up to $1,840 as our initial investment. So $1,840. And we need to put that dollar sign here so everyone knows we're talking about that cash. So, okay, we got 50 shares. We're going to multiply that by 3.67. So you got 50 times 3.67. Boom. You have 184, roughly about $184. So dollars 184. Now you can see here $184. You can see, okay, look, we added a 0 on here and we pretty much added a 0 to this one too. So if you were to pretty much multiply your investment by 10, you're going to multiply your monthly income by 10. But look, our next jump is not consistent with that. We have 330 shares. So let's see exactly how much 330 shares is going to cost, because this is a substantial jump. Times 36.8, boom. 330 shares is going to cost you $12,144. So let's put that in right now. We got $12,144. That's right. So this 330 shares, are we going to break $1,000 a month? Let's see. 3.67 times 330. That's our shares times 3.67. And what do we get here? We get $1,200 a month. $1,211. Let's write that down. 12. Okay. So you could see now that with a $12,000 investment, we're crossing over $1,200, really that $1,000 a month marker. That is huge. That really shows kind of the dividends being paid from IWMY. And look, you're likely going to have depreciating capital, but you'll have another $1,200 to then reinvest and get you more shares next time. And if we were to just take it just for fun and divide this by the current share price, which is 36.8, that's going to buy you 32 more shares. So now you're going to have 362 shares, which are going to be paying you hopefully the same dividend every single month. Now let's go a little crazy. We got 1,250 shares. I want to multiply that by the share price to give our final total here for exactly how much this is going to cost. Look at that. 46,000 on the nose. I've never seen that before. Let's get it. We got 46,000. Let's see how much a $46,000 investment in IWMY paying 110% in terms of dividends. Let's see how much that gets us. We got 1,250 shares times 3.67, $4,587. $4,587. So this is just kind of an overall video to show you the power of, high dividend yields, especially with IWMY. You got to remember that this is a stock or an ETF that trends down over time. Sure, this is their cover call strategy, and that's why they generate these extremely high dividends, which go on the Russell 2000. But you got to remember, this is also a period of time where the Russell is doing very well. There's periods of time where the Russell's relatively flat or potentially trends down, and you have to be very careful in these down periods because we could take big capital hits and big stock splits as the market goes down. Sure, when times are going good, you can generate these insane dividends with IWMY, but you got to be very careful because if the market returns, you could put yourself in a pretty dangerous spot, quote unquote. But this was nonetheless a video to show you the power of dividends and how little you could really get and how much you can earn in terms of total monthly income with a relatively small like total investment. So if you guys did enjoy this video, I want to thank Mr. A Sir Mike once again. Please remember to subscribe. Up to 5,457 subscribers. If you guys did enjoy this video, want to see more, request a stock or ETF in the description of this video or comment of this video, whatever you guys want.